What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we had a relatively flat day as we test very critical support levels, and we're in the thick of earnings seasons with big tech earnings finishing up this week, and then we have FOMC next week, so there will be plenty of excitement and plenty of catalysts to send this market in either direction. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. All right. So today in SPY, we were up 0.28%, and we are testing this very critical support level down here at 416, which is the previous low that we did double bottom off of. And if we break below that level, we are likely going to start force liquidating some long positions, which could lead to a very impulsive move to the downside. But I would expect to see a very strong bounce after that liquidation event is completed. So if we do break below 416, you're looking for a quick trip to retest the lows right around 411 to 410. And below that, we'll likely start trending down to fill the gap at $400. But I would expect to see a very strong bounce to a resistance level to test above before we see any more downside after that event. Now keep in mind, SPY is still extremely oversold, and this is the fourth day in a row with the price action below the lower Bollinger Band. So I do think a very impulsive bounce is likely coming as a reversion to the mean in the very near future. So what I favor in the short term is actually going to be more upside than downside. So even if we did break down below support, I do think a very impulsive bounce all the way back up to at least 428 or more than likely 433.5 to test this resistance before we would see any more downside. Now obviously there's no guarantee that we have to go see more downside after this bounce. So there's still always going to be the possibility we get the bullish breakout, a test of the breakout as support for a confirmation of the breakout as the successful retest, come back up and take out the high, and then get a confirmation that we're breaking out of the bear trend and possibly heading into a bull trend. Now, obviously, we need to watch the price action very closely, and there is going to be a lot more bearish momentum to the downside. So right now, this should be your preferred scenario until price action proves it wrong by breaking out, and we should start to see SPY getting over this critical resistance at 438 if we are going to get the bullish breakout. So anytime SPY is getting above the 430s, that will be looking more bullish. But you have to remember, if you look at this resistance trend line, any of those price targets of those resistance levels are still just going to be a lower high in the grand scheme of a downtrend. And remember, lower highs and lower lows define a bear market and a bear trend. And right now, this is going to be possible that we could be heading into a bear market. We only know what the price action is telling us. And right now, the price action is telling us this market is getting ready to go risk off if it starts breaking below 416. So in the near future, while I do expect to see a bounce to come back up to 428 to 433, we need to get that bullish confirmation of a breakout before we confirm that we're breaking out of this downtrend. You can see this 20 simple moving average is about to cross below the 50 EMA. So we will have the full bear trend. And as I always say, the trend is your friend because people will use that trend to start shorting this market more aggressively and with more confidence because price action usually goes in the direction of the trend. So wait for bullish confirmation of the price action to break out above critical resistance above the 430s and 440s to start getting more bullish. Otherwise, you can still take long trades off of strong support. Just don't try to swing trade in the long term if we're heading into a bear market, because in a bear market, prices will trend lower, and you shouldn't be swing trading for long positions in a bear market if prices could be heading lower. So hopefully that makes sense, and you're looking for the catalyst to enter the bear market on a decisive break and close below 416 as we continue to trend down towards the price targets at 400 and 390. On the NASDAQ 100 triple Qs, we were down 0.12% today, and we did decisively close below 318 for the second day in a row. So that is definitely going to be bearish price action, breaking down to a new low. But just like with SPY, it is likely we are just getting way too oversold, and we need a lower high before we can make another lower low. So from here, the most likely scenario would be the triple Qs bouncing up to resistance right around 334 or 341, and we could go as high as about 347 to 350 and still make a lower high before we attempt to put in a lower low. So in the short term, it is very likely we are going to see a dead cat bounce, and it's only going to be bullish if we get the bullish price action breakout and start making higher highs and higher lows. So watch those three critical resistance levels above with the critical support to the downside at 318 and right around 303.5. Remember, at this point, the bear market is the preferred scenario because we do have the confirmed bear trend, we do have the confirmed bearish price action breaking down to a new low for the second day in a row, and we do know that the trend is very strong in the downward direction until we see bullish breakout in the price action. So treat every bounce to strong resistance as a possible lower high, which means you should be locking in your profits if you're taking long trades, or setting up good risk reward short setups at very strong resistance levels, knowing where your risk is defined at these levels. On the Dow Jones, we were up 0.17% today, and we see the Dow Jones closing below the lower Bollinger Band for the 4th day in a row. So just like with the other indices, we are likely due for a bounce at this level. We closed right on top of that critical support at 333, and we still do have a valid downside price target at 326 because of the double top. So we'll likely have the bear trend as soon as tomorrow, and we're not getting bullish until we start closing above 340 and back over 344, and then we will likely fill the gap at 347. Above 347, we'll get a bullish breakout, and we'll have strong resistance at 350 and 353. But right now, we have to respect the fact that we have bearish price action with a bear trend, so we should be looking for the potential of a lower high at any of these resistance levels above, and then a potential rejection as we continue to trend lower. On the Russell 2000, we were down 0.42% today, and the Russell 2000 is clearly leading the way lower as it closed to a brand new low and heading down to that support level at 183. We have the confirmed bear trend and the bearish price action for 2 days in a row. Even though we are getting oversold, we are very likely coming down to tag this support at 183. So if we do start to bounce in the short term, you're looking for strong resistance around 191 to 193. And if we bounce higher than that, you're looking for resistance around 195 to about 199. Anything below the 50 EMA is a lower high, so you should be looking for a rejection at resistance as we continue to trend down towards 170. You're getting a lot more bullish if we start closing above 203 and 208, but not any sooner than that. On the ARKK ETF, we were down 2.21% today, and ARKK did close below that support level at $50. So just as we expected, ARKK does look like it's going to start trending down towards the next support at $40. Remember, this is an extremely strong bear market with no buyers in sight, and there is a ton of bears just shorting this thing every time it gets to resistance. So there is no way you should be bullish on this ETF until it can start closing above 71. In the short term, if we do bounce, you're looking for resistance at 52, 54, and 59. And if we do start breaking out above 60, you're looking for the gap close at 66. I can't stress it enough, this is a very strong bear trend, so continue to expect lower prices. On the VIX, we were down 5.73% today as the VIX is getting way too overbought outside the upper Bollinger Band, but still closing above 30, so we're still in a market with elevated volatility. We're getting a lot more bullish the next time the VIX starts crushing down below 24, and we should be in a bull trend the next time the VIX crushes below 20. So stay cautious of the bear market while the VIX is above 20 and definitely above 24 and 30, because that is a very volatile market that could still lead to panic selling and capitulation. On Bitcoin, we're currently up about 3%, and Bitcoin is back testing the breakdown through support at 39,000, and so far it is holding up as resistance. So you're looking for a clear rejection of this level as resistance to come down to test support at 37,000. If we lose support at 37,000, you're looking for the next strongest support down there at 30,000, and we're getting a lot more bullish if we can start closing above 42,000, and above 42,000, you're looking for the bullish breakout above 45,000. This is clearly in a bear market with a strong bear trend, so don't get bullish until we get the bullish breakout above 42,000, and continue to get ready to buy at lower prices as we come down to some very strong support levels. This is usually the part of the video where we cover the tech stocks, but I did do a special video update intraday today, so if you're looking for analysis on the big tech companies, you can go look for that video now. On the financial sector, we are flat on the day, going down 0.08%, and we're at very critical support down here right around 35, and we do have the bear trend, so we cannot get bullish on the financials until they start closing back over the 50 EMA. The industrial sector was up 0.37% today, but we still have the bear trend and we still have the bearish price action, so wait to get bullish until we can get back over that 50 EMA. The healthcare sector was down 0.22% today as we continue to close below all the moving averages, and we are developing a bear trend, so it does look like the healthcare sector is going to go through a deeper correction until we get back over that 50 EMA and hold that level as support. The energy sector was up 1.46% today and still hasn't closed the gap above at 76 and trying to get back over that 50 EMA. But what is likely going to play out here is a rejection at resistance at a lower high and then the next leg lower to finish out this correction. So jumping back over to the S&P 500, we are definitely at very critical support levels that will likely lead to an oversold bounce in the very near future. But we are very close to going into a bear market, so you need to be very cautious at resistance and try not to get bullish until we get confirmation of the bullish breakout. There is no reason to get FOMO in this market because we are very likely going to have plenty of time to see the bear trend reversing into a bull trend. So don't have any fear of missing the next rally if we do start to break out, you will have plenty of time to get a confirmation of the breakout, and then you'll have a much better risk reward entry. So right now, treat every bounce as a lower high before we continue into this downtrend, and make sure you're prepared for a bear market because they can come at you very quickly. And even when everything is looking good and everybody is feeling good, and even if the earnings are starting to look good, that doesn't rule out the technicals that we have bearish momentum with a bear trend and bearish price action, and the market is going to usually go in the direction of the trend. Even if it doesn't seem rational, I always suggest following price action and trend. Don't try to fight the trend because you think the market should be going higher. And also, don't be getting overly bearish when we get to strong support. Even though we have a lot of bearish momentum, it's really hard to be shorting down here at support when there's a real possibility that we get a very strong bounce to test resistance before we go any lower. So try to make sure if you're shorting this market, you're doing it at very strong resistance and then taking your profits at support. Don't get greedy in a volatile market because volatility does work in both directions. So even though we could be entering a bear market, that doesn't mean we won't still get very impulsive rallies to the upside, which will likely be met with strong resistance and lower highs as we continue to trend lower. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends all of your buy and sell alerts directly via email and text message. Even if this market is going into a bear market, you can see in 2008 when we did have a bear market, Bank Trade Alerts beat the market that year and had a very positive year. If you're looking for more information about Bank Trade Alerts or want to subscribe, you can find out all of the information by clicking on the link in the description of the video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord server, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.